Got a stock that's buzzing today, NIIT Tech in the green on the back of a good set of earnings coming in. Strong commentary also from the management. They've seen a decline in the first quarter, but going forward as well, they're sounding fairly confident, or at least that they're in control of the situation. So let's actually listen in to that commentary.
Quarter 4 was a very strong growth quarter for us. We grew 3.3% sequentially. We grew 19% year on year on a quarterly basis in the quarter for which we announced the results. Year numbers also, as you would have seen, that's an 18.5% jump in fiscal year 20 over fiscal year 19. Now, we experienced, like other players in the IT services space, significant headwinds, especially given our exposure to the travel sector. And hence, we're very pleased with the 3.3% quarter-on-quarter growth that the firm has recorded. Looking ahead, the order executable of the business at this point in time is at a record high in our history. Our order executable is $468 million. In the quarter that concluded, despite the COVID-19 related headwinds, we've signed another 3 large deals. Quarter 3, we had 4 large deals. Quarter 4, we have 3 large deals. So there's a lot of tailwind behind us as well, and and there's no arguing this, there are significant headwinds coming in on account of COVID-19. Yesterday, when we spoke to the analysts after the results were out, what I've indicated is, even though we normally do not give a guidance, this year we've shared that in quarter 1, we expect a sequential single-digit decline, and in quarter 2, importantly, we expect a sequential growth going forward. So that's the quarter 1 and the quarter 2 outlook as we see it.
Right. 2 specific verticals that I wanted to talk about. One, of course, is the travel and transportation vertical, which I think accounts for nearly a third of your revenues, 27%. What impact do you see there? Any client-specific issue? And also, if you can give some color on the insurance vertical, how is that looking?
Absolutely. Let me talk about the travel vertical first, and then I'll move on to insurance, and if you want, to the BFS vertical as well. Travel for us is 28% of our aggregate revenues. Within the broader travel industry, airlines, which is the distressed part of that industry, particularly distressed part of that industry, contributes to around 46% of our travel industry volumes. Hence, about 13% of the NIIT Technologies global revenues come in from the airline subsegment of the travel vertical. That subsegment quite clearly is under distress. It's been under distress in quarter 4 as well, the quarter that we closed. We expect no immediate near-term or medium-term rebound in that specific subsegment. So as we look at the future, as we planned out, as we baked in numbers and shared the guidance that I gave you for Q1 and Q2, our assumption is that the airline segment is going to continue to stay in a distressed state, at least all the way till possibly Q3 end, if not further. That's a quick roundup of travel. Airlines for 46% of the aggregate volumes. The remaining 54%, which is travel technologies, which is airports, which need a lot of technology intervention these days, which is rail and surface transport, has held well. And our results in Q4 are a good example of that. Moving on to the second vertical that you spoke about, insurance, that's been a very strong story for us. As you would have seen in quarter 4, that vertical has grown 5.8% sequentially over quarter 3. Insurance is a space where we continue to see a very strong demand outlook, more than a good outlook, where we continue to expect to see growth in quarter 1 and sequentially into quarter 2 as well. And if you were to delve into BFS, I think it's a story that's very similar to insurance, and the outlook also, again, is fairly similar to that.
Right. A quick word on margins. How do you see margins from here on? And, many companies have spoken about measures that they are taking to preserve margins. They're talking about freezing salary hikes. They're talking about cutting down on every cost possible. Can you tell us about what measures you have taken, and also a word on the employee impact that you see? Are you going to look at salary cuts or freezing salary hikes? What are you going to do on the hiring front? Some color on that.
Absolutely. Our margins, as you would have noticed, have come in at 18%, which is the highest for any IT services player of our comparable size, of our peer set. We feel good about the cost containment and the cost out measures that we've taken. The approach that we've taken is, it was fairly apparent to us as a leadership team around February that very significant and very immediate cost outs had to be initiated. The cost out measures have not just been initiated, they have been executed as I speak to you right now. So this isn't a bunch of measures that we are contemplating and will action out. In our case, we came up with the measures, we actioned the measures after having communicated them. The measures have addressed just about every aspect of the cost structure that we have. The non-personnel G&A costs, we've gone after them with almost a zero-based approach. We have taken them out, and as we get into Q1 and beyond, we feel good about the margins as a consequence, despite the headwinds that we've talked about so far. What we spoke about yesterday post the results and the analysis that I had shared fundamentally was that given the fact that the cost outs have already been effected, the savings are already being realized instead of being contemplated, next year as well, across fiscal year 21, despite the headwinds, despite the COVID-19 pandemic and its impact, we expect our EBITDA margins to be within 80 bips of the 18% that we declared in the quarter.
Right. Final couple of questions. A lot of people are curious, on the whole decision to change the name, the brand name to Coforge. In fact, I've been getting queries on Twitter, has there been a takeover? Is something else happening? What is your take on that? And secondly, digital revenues, 38% you got from digital revenues. Do you see this increasing as more organizations kind of turn to digital transformation to tide through the COVID crisis?
Sure. Let me talk about the brand name, the name change that is in the offing. It's not been effective. What has happened is, in the board meeting yesterday, the board has approved the new name of NIIT Technologies, which is going to be Coforge. We need to go to the shareholders and we have to go back to the regulators for final approval. If all goes well, we will make that change around the September timeframe. So as of now, NIIT Technologies for the next quarter, possibly beyond, continues.
That's the word coming in from the management, continuing to see strong demand despite these challenging times. They are taking some cost-cutting measures which are already in place, and there has been sequential growth. Take a look at the stock of NIIT Tech as well, up and about double-digit gains that you're seeing on the charts. 92.70 on the index. We slip into a very quick break. Do stay with us for more on Closing Trade.